Hello. Today we're going to talk about using the FASB Accounting Standards codification. You'll find the login information in the Engage course shell. Once you've logged in, this is the screen that you'll see. So on the left-hand side, you'll see the different topics listed under the codification. So it starts off with general principles, presentation for financial statements, and then it breaks it down to assets, liabilities, equity for the balance sheet, revenue, expenses for the income statement, and then there's broad transactions. So some transactions that impact several statements or balance sheet and income statement, you'll find additional guidance here, and then there's also industry-specific information as well. Anytime you see an X, that's going to be SEC specific guidance. So here we're going to actually talk about variable interest entities today. If you're interested in learning more about them, you can look at case 16-6, closely CARS, I think the case is called. We're not going to review it during the course, but I'm going to use that as an example of how to interpret the guidance, because that's a very confusing topic. So it's actually a broad transaction, and we're going to look at consolidation. One of the first things that you want to do when you're going through the guidance is to understand whether or not the transaction or the fact patterns that you're looking at fall under the scope of the guidance. Okay, so here we're going to start with looking at the scope. So I'm going to actually pull up the case real quick for you guys. Hold on a second. It's closely associated cars. So here we're looking at a corporation that purchased 40%. They entered into a joint venture where a company was formed 60% owned by auto car and 40% owned by electric car. And it goes on to talk about different parameters. So again, when you're looking at a case, the first thing you want to do is go through the fact pattern. I'm not going to do that today because the point of today's lecture is actually to understand how to read the guidance. So here we're looking at the different types of entities that fall under the guidance. So this is to determine whether and how to consolidate another entity. So it's applicable. Here's the things that are applicable as follows. If the entity has an interest in an entity, it must determine whether the entity is within the scope of the variable interest subsections in accordance with this. And if it's in this scope, then they should apply the guidance in those subsections. This guidance here provides specific exemptions, okay, and we'll go to that in a minute. If it's not within the scope, then it gives you a different set of guidance to go to. And then if it's a contractual management relationship with another entity, it's not in the scope of this. So you'll see that the guidance does this a lot. It gives you different options or different subsections to refer to that you kind of have to follow through. The guidance sometimes is referred to as a maze, or that you have to kind of tunnel your way through to the end. So let's skip ahead. So here, all legal entities are subject to the topics evaluation guidance for consolidation by a reporting entity with specific qualifications and exemptions below. Whenever you see highlighted words like this, that's going to give you a definition. So if you're not sure what they mean by legal entities, you can actually hover over the blue words, highlighted words, and it'll give you the definition here, and then you can click for more. Okay? You'll see that this topic does not apply to non-profit entities, and the guidance applies to all reported entities with the specific qualifications and exceptions noted below. Excuse me. All right, so here we see that a reporting entity shall apply consolidation guidance for the entities that are not in the scope of the variable interest entity subsections as follows. Okay, one of the things that the guidance likes to do is talk in negatives. So here, this is the guidance that you need to apply if you're not in the VIE, which means variable interest entity subsection. Okay, so you got to make sure that you understand whether or not they're using not. So this is the guidance if they're not a VIE or do not fall into that scope. So all majority-owned subsidies, all entities in which parents shall be consolidated. However, there are exceptions to this rule, all right? However, again, pay attention to when it says that. A majority-owned subsidiary shall not be considered if control does not rest with the majority owner. For instance, if any of the following are present. All right, so what does that mean, if any of the following? That means that it could be any of these. It does not need to be all of these. Sometimes it'll say if all of these are present, if two of these are present. So it's really important that you pay attention to that language, all right? So if your entity that you're looking at meets number 1, you can stop right there. You don't need to read the rest of it. If it doesn't, then you keep on going to see if any of these instances are applicable. If none of these are present, so a majority-owned subsidiary shall not be consolidated if control does not rest with the majority owner. So if any of these are present, then you don't need to consolidate it. A majority-owned subsidiary in which a parent has a controlling financial shall not be consolidated if the parent is a broker-dealer. So you have to go to this topic to find out the definition of a broker-dealer. Okay? So those are just some pitfalls that you need to be aware of, whether it says if any, if all. Make sure you understand how they're using their double negatives. Let's jump ahead to the variable interest entity subsection. All right, so this is the variable interest subsection, which follows the same scope and scope exemptions as outlined in the general subsection of this subtopic, which is what we just read. For purposes of applying the VIE subsections, only substantive terms, transactions, and agreements shall be considered. If the term, transaction, or arrangement does not have a substantive effect on any of the following, okay? So, again, any, not, what does this mean? So here's the definition of entities, what falls under it. For this purpose, the total equity investment at risk has all of the following transactions, okay? So when you're reviewing the entity, you need to make sure that it has every single one of these. If it does not, then it doesn't fall under this guidance. As a group, the holders of the equity investment at risk lack any one of the following 3, okay? So if they do not have any of these, and then you go through the guidance and review those. So you can see I picked some pretty heavy guidance here to go through because this is an example of how the language impacts your interpretation. And sometimes you need to read through the guidance several times before you understand what it's saying. So don't get frustrated. It takes practice, and that's why we start off with some of the easier cases, and then it gets harder throughout the semester. So please use this opportunity this week to go through the different examples provided, to get familiar with how the language works, to make sure that you're understanding whether or not double negatives are being used, if it's any, if it's all of the items listed, all of the criteria, one of the criteria, none of the criteria are present. As always, if you have any questions, please feel free to reach out to your instructor with those. Thank you.